Hey guys, in this video we're going to show you specifically why some of the biggest one-day drops in the history of the United States stock market are just around the corner. Now, this is what we said about Bitcoin actually in December of 2017, exactly a year ago. Surprisingly, this was actually the first video we posted on this channel. Check it out.
My 2018 shocking Bitcoin prediction. It's gonna crash. Lights out on Bitcoin. It's gonna go dark. And here's the reason why. When everybody starts screaming, oh my God, Bitcoin is gonna go to 100,000. Bitcoin is gonna go to 500,000. Oh, forget about that. It's going to 1,000,000. This is the time. This is the time to get out. This is the time to sell. Price of Bitcoin and the forks, and you divide it by the number of forks. If you do that, you roughly will arrive at a number of $3,000. So as we speak, today on December 30th, 2017, 12 months forward, Bitcoin is worth $3,000.
Fast forward, December 5th, 2018, here's what we got. Bitcoin futures are trading at 36.40. Now, the markets are actually closed today, but the futures are active in Bitcoin. As you probably know, most of the drops in Bitcoin happen due to the Bitcoin trading internationally in big markets like Japan and Korea and so on, which is reflected in the US futures as well. Now, here's what the main issue with this is. Here's some of the comments that we used to get when we posted our gloomy Bitcoin outlook. Needless to say, 99% of these comments are nasty and ugly because why? Well, people were going absolutely crazy. They were mortgaging their homes, they were maxing out their credit cards, and they were buying Bitcoin exactly at the time where we were suggesting to short Bitcoin to profit from its inevitable drop. But people were blinded by the meteoric rise, and unfortunately, not as many people as we would have liked listened and profited on the drop. So the idea of this video is to communicate to those of you that are interested in how to make money when stocks drop, how to make money when cryptos drop, when commodities drop, and so on, so you wouldn't be like one of these people living comment like this. So the people who are a lot smarter than you are wrong pertaining that we were saying Bitcoin was going to drop and they were saying Bitcoin was going to go to 500,000, 1,000,000, and so on. You do know there are billionaires who say that you're wrong. Well, it doesn't matter what billionaires are doing out there. What matters is how does your bank account look? Who cares? Maybe some billionaires, they got too much money to waste, so they were buying Bitcoin as just a small investment. What is $1 million or $10 million investment to someone? You know, maybe just a small fraction. So maybe to them it was more of a gambling get. But if you're an individual trader or an investor, you certainly want to be avoiding situations like that. And more importantly, you want to learn from the history. What type of history? The history of charts. Our call in December 2017 about the inevitable Bitcoin drop was based on the charts. There's specifically, if you maybe have taken our chart course, you know that we identified a chart pattern. You probably never heard of it anywhere else as the loss of momentum. As the momentum building up, we were actually being able to identify some things on the chart that were pointing out to a short-term loss of momentum, which inevitably led to the initial drop from 20,000 to 16,000 to 13,000 and so on. We posted multiple videos on this channel, even at the level of around 11, 12,000, suggesting for people to sell Bitcoin and use the money, and even if they were absolutely in love with it and they wanted to have more Bitcoins, to buy it at lower levels. Now, those people that did listen, they're incredibly happy that they did. The idea of this video is to do the same thing that we did with Bitcoin in 2017 and to help those of you that do want to listen profit on the inevitable United States market crash. As you clearly see, the name of our channel is Market Crash 2018. And the reality of things is such the charts are pointing to the inevitable drop. So I'm about to show you a bunch of charts. And I'm not going to talk in great detail. I'm not going to try to disclose a bunch of, little details that may not make sense if you haven't studied the charts in our chart course. But I am just going to highlight basic key things that should help anyone, even if you've never traded a stock or an option in your life, understand what's actually taking place. So first, before we do that, let me show you this, that majority of the people are just simply not used to making money when something drops, because it's unnatural for an average individual to think of things, oh, I can make money when something drops. Generally, people are conditioned to simply be buying something and holding it in the expectation that the value will climb. Now, there's nothing wrong with doing that and executing such strategy when it actually makes sense. However, just as in December 2017 with the Bitcoin example, people were buying it at these insanely high levels after it already appreciated thousands and thousands of percent. And people were buying it simply in the hopes that it was going to go higher. We're observing the same mentality right now in the markets. The markets in the United States are trading to their all-time highest levels in the history of the United States. And people are just been so conditioned in the last 10 years that every time the market drops, they're used to buying the dips. And it has worked. But at some point, just like with Bitcoin, it stops working. And this is the time when it's actually about to stop working. And I'm going to show you specifically why in just a second. So it is actually a lot simpler, especially if you're a person that's trying to learn how to profit from options. Actually, it is a lot simpler to make money when things drop, because things drop a lot faster than they climb higher. So as you probably know, if you're trying to inquire about trading options, options deal with a specified time frame. And so even though sometimes we're not able to nail it specifically to the day or the week, but over a longer time frame, we're able to make some calls that are very precise if we study the charts. Now, if you've been following the channel, clearly there was a video posted right before Thanksgiving saying, oh my God, there's going to be a market drop. And the market drop did happen. However, one of the trades that we suggested in the video was buying VIX calls. Well, VIX actually goes higher when markets drop. Now, the VIX did go higher, but not as much as we expected it. Now, right now, the VIX is actually going significantly higher, but the charts were pointing that the VIX was going to go higher way ahead of time. Yes, it is so simple to profit when stocks and market drop, and I wish more people simply understood how to do that. So without any further ado, here's why the ability to profit from the drop now is more crucial than ever before. Okay, let's take a quick look on the chart that shows us specifically what happened in December 2017, because it is crucial if you try to understand what's about to happen in the stock market. As you can see, Bitcoin tops right here at a level of $18,000 to $20,000. That's when everybody's trying to get in, including their mother-in-law. That's when you turn every media channel on and that's all they talk about is Bitcoin. And they're all buying Bitcoin. Well, that is actually the first sign you should be getting out. And so shortly after that, Bitcoin starts dropping like a rock. Now, the most important aspect of this chart right here is to observe what actually happens to the United States stock market shortly after. Literally, within 30 days, what appears to be the best bull market of all times, when they announced the tax cuts and so on, the United States market starts to drop just as fast as Bitcoin. What we're noticing is we're in similar conditions. And so shortly after that, and I'm talking about the week of February 2nd through February 9th, as you can see, S&P 500 drops like crazy. Within a week, notice it's not just the size or the magnitude of the drop, but the time frame of the drop. The rate of change of the drop was absolutely insane. And I'll show you the importance of that in just a second. Now, here's what we've got. In the last 30 days, Bitcoin gets slashed in half again when it just seemed like it just cannot fall any lower. Look what happens. $6,500 all the way to $3,505. Now, this actually took place roughly about 8 days ago. Remember, United States stock market fell within 30 days after the significant Bitcoin drop. Now, in this case, we're already 8 days into it. This right here, the Bitcoin chart, tells us that the United States market is about to drop in the next few weeks. Now, you're going to say, well, come on, dude, you're just going to use that just because it worked last year? No, because we're not just using that. This is just one of the elements that actually tells us that the bigger drop in the United States stock market is about to take place. Now, let me walk you through a few other charts right here. Here's a chart of S&P 500 on a daily time frame. If you've been following the channel, you clearly understand that when the blue line crosses the orange line, that is a phenomenon known as a death cross, which in majority of the cases predicts roughly, based on our studies, and I don't know what anybody else says about it, but based on our studies, in majority of the cases, you would expect to drop anywhere from 10 to 20% following the death cross. Now, there's clear exceptions. Actually, sometimes in certain instances, stocks do not drop immediately after the death cross. They actually can go higher in the short term, ultimately dropping much lower and on significant volume and magnitude. So this is the situation that we've got developing. And I want you to just take a mental notice of how this chart looks, right? This is pretty much top information right here, identified by a black candle. Now, a lot of times we've talked about the black candle in our videos, which is actually something we have discovered that predicts the further direction of the market or the stock. So if you'd like to learn more about that, definitely take advantage of our chart course. Just hit one of the links in the description. You'll be able to do so. Now, this looks right here to us like a triple top. Here's a top 1, top 2, top 3 right here. Coincides with the, if you were to look at the volume on this chart, right, the red bars are represented by the sell-off volume. If we're to study this chart carefully, there's a lot more sell volume in here than there is the buy volume. In other words, the stocks continue going higher and lower volumes. They sell off on much higher volumes. So overall, when you look at this chart, just generally speaking, just forget about all the technicalities. Do you see more red or do you see more white? White meaning like candles that look like this. Overall, to me, it looks like red is much more prevalent on this chart. Now, let's take a closer look. Actually, let's take a bigger look. By the way, the 45-day target in our view on S&P 500 is 23.25. Currently, it's trading around 2,700 level. The importance of this is a lot of media channels are brainwashing people right now, saying something to the magnitude of the Santa Claus rally. Oh, the markets are going to go higher. They do it every time in December. And so I talk to a lot of traders on a daily basis. They're just completely brainwashed. Okay, they see the stocks going higher in low volume and like, oh no, the market's going higher. Guys, look, if you want to have an outcome like most people had with Bitcoin in 2017 and further from there, then don't listen to the word I'm saying. But if you do want to make money on this inevitable drop, okay, pay very close attention, because what you will hear them speak in the media is this. Well, this is a double bottom right here, right? You got the support line clearly. And what we're looking at is the S&P weekly time frame now, right? So it looks like the market is not going to fall further below this 2600 level or 2650 level, right? It's clear that like there's a level of support. Okay, well, there's a major difference here. There's a major difference that tells us that things are about to get way worse and the markets are going to drop, not just S&P 500, but Nasdaq and Dow Jones and pretty much everything. So here's the main difference. It looks like this thing looks just like this part of the chart right here. Looks just like this part of the chart, right? I mean, it looks like here's the top. Here's it tries to go lower once, bounces, then it tries to go lower twice, bounces, goes higher. So you would think, using this analogy and analysis, you would think, okay, so here's the top again. It goes lower once, it bounces, it goes lower second time, it bounces. Okay, all of that is fine and correct. However, there's one big freaking difference, okay? And the big difference is this time the market is doing all this under the 50-day moving average. So this blue line right here is the 50-day moving average. The significance of this is institutional investors, they like to buy things and stocks when they slightly touch this blue line and normally it would act as a support off which stocks would bounce. That's why the strategy of buying the dip has worked for so long over the last 10 years. Now we're getting a different picture. What happens when such developments in the trading happens under the blue line? Actually, institutional investors use this as an area from which they distribute their stock positions. In other words, they're heavily selling their positions opposed to be buying them. Now, I know that sounds highly contradictory because, again, if you're paying attention to what they're talking about in the news, they're saying exactly the opposite. It's a Santa Claus rally. Oh, this is a great opportunity to buy. You'll never get another chance like this. Oh, my God. You know, look at Amazon. It has come down $500 since the top. Okay, you know, this is an incredible time to buy it. Guys, don't get brainwashed. Okay, this is not a bullish chart. Okay, this is the beginning of a much bigger drop. Now, to make the explanation a little bit more visible, look at Nasdaq. Now, Nasdaq has already created this death cross formation, and look what happens shortly after, right? So if we're to take this death cross and we're to time it, right after the death cross, what happens? From 7,100, Nasdaq trades all the way to 7,400, and it begins the drop. Okay, same formation, right? You've got 1, 2, 3 tops. Same black candle right here. You got same developments. The sell-off volume exceeds the buy volume. Got a lot of things, and the cool thing is your accumulation distribution still got plenty more room to drop, meaning that a lot of institutional investors, they still own a ton of stocks, and when they all run for the exit at the same time, there's going to be a major sell-off. Guys, we're about to witness some of the biggest one-day drops in the history of the United States stock market. I wouldn't be surprised if it was a day where the Dow Jones dropped 2,000-3,000 points in one day. I think that could easily happen over the course of the next week, 2-3 weeks. We're not very far from it. So actually, our 45-day target for Nasdaq would be 5,900. Dow Jones, take a look. Look, these charts are very consistent, right? Triple top again, lots of selling going on, breaking through the key levels yet again on Dow Jones. I mean, these charts are pretty consistent. Now here we have not formed a death cross. We're not as near to a death cross formation as we are on S&P 500 or Nasdaq, but we're getting closer and closer each day. So there's still room, in other words, for stock to go significantly low. What's our target price for Dow Jones? It's 20,500. If you do the math, we're literally saying here that there's about a 20% drop that has not been priced yet into the stock market as of December 5th. Now, 20% drop in the world of options, that's a ton of money. Guys, some of you will be able to pay off your house. Some of you at least will be able to pay off all your cars. Some of you will be able to pay off your student loans. This is the kind of opportunity you have in front of you. So when most of the people are waiting right now to buy the dip, what you want to be doing is you want to be shorting stocks. You want to be utilizing put options to profit from this inevitable fall. So you're going to be able to make the money on that. And clearly, there's going to be a time to be buying stocks. Again, this is just not the case right now. And you're going to be able to use some of the money you've made on the drop to profit essentially on, at some point, the rise in the stock market, but not near term. Okay, let's take a look further. Japan, stock market in Japan. Look at this. How close we're getting on the death cross as well. So we're basically getting a consistent reading on pretty much any chart you look at. You're going to say, okay, well, what about Europe? Well, Europe, same thing, guys. Trading on the key levels, got a head and shoulder pattern right here, very bearish, right? I mean, and look at this sell vol. Look at these red bars everywhere. I mean, you don't have to know nothing about nothing when trading stock to clearly see that there is a lot more selling going on at these levels rather than buying, represented by the red bars. Oil prices. Oh, goodness, look at this. A death cross in oil prices as well. Look, it doesn't matter. You can plug in any chart. As a matter of fact, there are only 2 bullish charts out there. I'm going to show you the 2 bullish charts, but all the other charts, they're incredibly bearish, guys, and incredibly consistent. And it is very rare in the stock market where we get such an incredible consistency across pretty much 90% of the sectors. That is why there is such a great probability that the market will move significantly lower. So here are the 2 bullish charts. Okay, surprise, surprise, time to buy gold. But not because of the Bitcoin crash, right? Why is it time to buy gold? Gold futures? Because actually dollar shows signs of topping. So lower dollar equals higher gold prices. US dollar, we actually seen a topping formation, multi-top formation, 1, 2, 3, 4, 5. And so from here, we think dollar is going to start its descent. And if dollar continues the descent, then gold prices are going to start going higher. Now, it is not yet reflected in the gold chart, but we're seeing some early signs that investors are coming in and they're starting to buy gold. And here's how that looks. Long-term target on dollar is actually 87. Gold, here's what we've got with gold right here. We've got a reverse head and shoulders, which is a bullish pattern. You clearly see these white candles right here on the upside, how they're trying to, there's been some major investing going on right here, so people are coming in and they're scooping up gold, and so currently it's around, $1,240. The RSI is also going higher in gold. There's a great probability of all breaking out. And as far as our yearly prediction, looking 12 months ahead, we think, and call me crazy or call me whatever, but long-term target on gold, going a year ahead, we think gold could easily double. Now, it doesn't mean it's going to double this week. It doesn't mean it's going to double over the course of the next 30 days. But just like we predicted that Bitcoin was going to lose 90% of its value, or 80-90% of that value, our stand on gold is that it can actually double within a year. Now, here's the next bullish chart. It's actually the change. It is actually the VIX chart. VIX has the exact opposite relationship with the stock market. Now, it's been very rare for the VIX to trade around the 20 range. Historically, as you can see on this weekly chart, this is where VIX went that unfortunate week of February 2nd through February 9th, right? Shortly followed by the Bitcoin drop, United States market dropped, but the VIX actually went significantly higher. Generally speaking, in the course of the last 10 years, we've been in predominantly a low VIX environment. Low VIX environment numerically spells a numerical value on VIX between 8 and 13, 8 to 13. So you can see, for example, for the entire year of 2017, VIX has never gone above, literally, like 14, 15, but predominantly has been trading around the range of 10 and 11. Now, notice how the VIX environment has changed just in 2018 alone. So here's what we've got. VIX shot up to 55 the week of February 9th. Then it came back down. Found some support. Very interestingly, we had a recent development here, which we actually predicted in one of our videos like a month or two ago. We said that there was going to be a bullish crossover, which is exactly the reverse of a death cross. So this actually a very bullish formation when the blue line crosses the orange line, with 50-day moving average crosses the 200. This is actually a bullish a reversal here, which signifies further gains to be made in the VIX. And generally speaking, if you study the history of the VIX, every time it goes higher, it comes back down pretty quick. Well, this time it has gone higher and it's been able to sustain that level of 20 for some time. And in our view, it's actually building the platform to make a significant move higher. So again, when the stock markets drop, VIX goes higher. Everything on this chart of VIX, including the MACD, including the bullish crossover, including this accumulation around 20. A lot of these things are incredibly bullish in the VIX chart, which coincide with incredibly bearish things in all the major indices and all the major stocks. So if we take this as a sign of further developments, this is another confirmation. Now, I know some of you that may be watching some general media, there's somebody brought that to my attention a couple of days ago, saying that, well, there's one guy out there on CNBC or something, he's saying that, well, the market dropped, but the VIX didn't go as high as it did in February of 2018. Well, clearly, that statement is correct, with the exception, it's not the numerical value of the VIX that predicts the further astronomical rise in the VIX. As you can see, if you study the chart of the VIX right here, it is the rate of change that predicts further meteoric rise in the VIX potential. Look at this. In other words, the VIX here before the crash in February 2018 went from literally 12 to about 17 in a very, very short amount of time. That is a huge rise. That's like a 40% change within a very, very short amount of time. And look what followed, right? Look what followed it. Even a further rise in the VIX. And if you study this chart right here, we have similar circumstances. By the way, this is highly repetitive, right? So take a look right here in October. We had a really huge rate of change where VIX have literally went from, under 12 to 17 again, and followed by a further rise all the way to the 27, 28 range. As you can see, both of these further dramatic increases in VIX were preceded by the initial huge rate of change within a very short time frame. As you can see, for the rest of the time, VIX trades in a pretty tight range, right? And so only when you get a huge rate of change, notice not necessarily, the higher value of the VIX. Like, it doesn't matter whether the numerical value is 28 or 32 or 35, right? That's not what matters. What matters is the rate of change. And by the rate of change, I mean, well, if you take a VIX at 10 and it goes to 15, that's a 50% increase, could be in some instances in one day. And what we've recently had, just yesterday, on December 4th, VIX went from 16 to an intraday high of almost 22. To be exact, it was like 21.94. That's over a 30% rate of change on the VIX. And the time frame matters because it did that within 30 minutes. Okay, so it's the rate of change in relation to the time frame of when it occurs. So if we observe the rate of change rather than focusing on the actual numerical value of the VIX, it tells us that the VIX is about to go through the roof, which we have pointed out in some of our videos backdating all the way to, I think, early August. We said the VIX was going to go from, at the time I think I was recording the video, it was like at 11. We said it had a chance to go in the high 20s. It did. Recently, we've been talking about VIX potentially going all the way to 80. And so I think with all the charts, pictures that I've shared with you, and there's plenty more, okay, but I don't want to make these videos for like 2 or 3 hours. So basically, if you were to look further into more charts, you would discover the consistency of all the charts unanimously pointing to the stocks dropping into the VIX going to the moon. VIX can easily go to 80 in the next month or two. To help you visualize this rate of change in the VIX, see this huge candle right here. That represents a huge rate of change within that small time frame. Look what follows that. Goes all the way to 50. Here's another candle. Huge initial rate of change in the VIX. Look what happens the next day. It goes much higher, almost all the way to 28. Look at this candle. Huge rate of change yesterday. That tells me there's going to be another candle. Now, we don't know the magnitude of that candle, but I do know there's going to be another white candle developing right here on the VIX. Now, it could shoot up, back to this level, let's say 28. It could go here. It could go significantly higher. But the bottom line, there's too many bullish things developing on the VIX chart to ignore. And another phenomena, as you know, in the expectation of the Chinese trade deal and some of the positive remarks about the interest rates last week by the Fed chair, the markets have been consecutively going higher 6 days in a row. Well, what was remarkable, here we have a chart of VIX. There's another thing that's called VIX, which is the volatility of the volatility. It actually measures the volatility of the VIX. So when the stocks were going higher, the VIX, or the volatility of the VIX, was actually going higher. It was supposed to be going lower because the market was going higher, right? But it was actually going higher, which was a huge divergency. And guys, if you're trying to learn divergency, if you're trying to learn more about charts, again, simply click the links below this video. Take action. We're fixing to roll into the new year. Huge opportunities. If you're trying to find out how you can discover some of the best trading opportunities, take action, click the links below, and learn more.